experienced a significant sell-off with major indices across the US, Canada, and Brazil seeing sharp declines, signaling widespread investor concern. In the US, the Dow Jones Industrial Average plunged 1.55%, that is minus 670.25 points, reflecting a strong bearish sentiment, while the S&P 500 dropped 1.22%, that is minus 71.57 points, that is indicating the pressure across the large cap stocks. The Nasdaq Composite declined 0.35%, that is a decline of minus 65 points. Also, the showing of the technology stocks that were slightly more resilient compared to the broader market but still face selling pressure. Also, meanwhile, the Russell 2000, which tracks the small cap stocks, fell 1.08%, that is a decline of 22.70 points, suggesting that investors are putting out of the riskier zones. Also, the growth-oriented companies and the VIX, commonly referred to as a fear index, surged 3.20 points, also indicating a sharp rise in the market volatility and growth uncertainty among investors. The Canadian market were also deeply in the red, with the S&P TSX Composite tumbling 1.72%, that is minus 429.57 points, and the S&P TSX 60 declining 1.89%, reflecting the broad-based weakness across key sectors, possible due to the commodity price fluctuation or macroeconomic concern. In Latin America, Brazil's Bovespa index suffered a major blow, dropping 1.60%, likely driven by the political instability or economic pressures. Similarly, the Childs S&P IPSA fell 0.42%, that is minus 31.07 points, continuing its downtrend. However, Mexico's S&P BMV IPC stood out as the only major index in positive territory, gaining 0.58%, that is 303 points of increase. That suggests the relative strength in the Mexican economy or investor optimism towards specific sectors. Overall, the market downturn suggests a strong risk-off sentiment, likely influenced by the economic uncertainty, concerns over the interest rate policy, and potential geopolitical risk. The rise in the VIX points to increased caution among investors who may be shifting towards safer assets like bonds or the gold. While the SDAC and the smaller decline indicates some resilience in the tech stock, the widespread losses across the various markets suggest that investors are bracing for continued volatility. As global markets react to ongoing economic and policy development, further fluctuation can be expected in the coming days. The commodity market showed mixed trend, with energy prices declining, with precious metal and agricultural commodities suggesting the slight gains. WTI crude oil fell 0.69%, that is $2.67.79, and Brent crude oil slipped 0.20%, $2.70.42, reflecting a downturn in the oil prices. This drop may be attributed to concern over the global demands, increased supply, or geopolitical factors affecting oil markets. Natural gas also declined 1.24% to $4.30, indicating the potential oversupply or reduced regional demand. On the other hand, gold edged up 0.02% to $2,921, maintaining its position as a safe haven asset amid market uncertainty. Silver also gained 0.38 points to reach $32.51, showing investor interest in the precious metal, possibly due to inflationary concern or economic instability. In agricultural commodities, soybean rose $2.10.03, indicating stability in the agricultural sector. Overall, the market movement suggests a risk-off sentiment, with the investors shifting towards safe haven assets like gold, while energy prices face downward pressure. Market participants will likely keep a close watch on economic indicator, geopolitical development, and supply